over 5%, having been more than 6% higher at one point during the session. That was leaving the benchmark of Brent price at the highest level since 2019. This, of course, as OPEC and its allies extended production cuts to the end of April amid warnings the recovery is still fragile due to recent rallies. Saudi Arabia was a big factor behind that, agreeing to extend its voluntary oil output cut for another month of 1 million barrels per day.
Yeah, under the new deal, Russia and Kazakhstan receive small exemptions, allowing them to raise output to meet domestic needs. Last year, output was cut by a record 9.7 million barrels. As of March, it is still withholding roughly 7% of world demand. And let's get some analysis on that from Paris, no less. Homayoun Falakshahi is a senior commodities analyst at Kpler, joining us live. Homayoun, thank you so much for joining us. Where are we now looking in terms of OPEC Plus and when they will look to increase supply?
Thanks for having me, first of all. I mean, indeed, I think before the meeting, the market was expecting around 1.4, 1.5 million barrels per day to hit back the market from OPEC Plus from the 1st of April. Now, I think it's been a big surprise, the fact that, Saudi Arabia has taken this out of their sleeves, a bit out of nowhere. I think the amount that was kind of expected to come back from OPEC Plus was still debatable. There were rumors that this may not hit back the market, but the 1 million barrels per day that Saudi Arabia has said it has been cutting on its own, so self-imposed cut from February. I think this is something that the market wasn't expecting, and then you've seen the impact on prices, and prices shot up. So I think it's the big surprise, and it's the perfect thing that OPEC Plus could have done to maintain that bullishness on markets right now.
I mean, how long do you believe it will go and maintain this production cut level, particularly from Saudi Arabia? We know that we've got some murmurs coming from the Russian delegation that they want to go and start increasing output beyond the current levels because the threat that may be posed down the line by US shale. What's going to happen from here when it comes to those production levels?
I think this is one of the key questions that is going to be asked in the next few weeks, is the fact that Russia depends. Russia is quite comfortable with an oil price that sits around $60 a barrel. Saudi Arabia and most other countries within OPEC Plus, they probably need an oil price that's above $80 a barrel. Now, as you said, the more we go higher on prices, the more U.S. shale producers will be, more comfortable starting investing again. So we've actually seen a couple of companies already announce capex increase. So I think this is going to be the next question. But I think what just happened is a strong message that is sent to the markets from Saudi Arabia, and if I could say, not just on oil markets, but also it's a kind of political message that is sent to global, world powers, namely the U.S. The fact that you've seen you have a much less warm relationship, for example, right now between the U.S. and Saudi Arabia, the latest findings from the Khashoggi case, etc., etc. I think this is a strong message that is sent from Saudi Arabia to say, hey, if you want an oil market that is stable, you need us. Like we are the real kingmaker on the market. And if you remember, just a year ago, we were debating over whether the real kingmaker within OPEC Plus is Saudi Arabia still. People were thinking that Russia had become the kind of kingmaker within the market. Well, Saudi Arabia right now here is showing everyone that if you want to look at oil markets stability, then you need to really pay attention to what they're saying. So it's a strong political message, and a message to the market, obviously, that they've been sending.
So when it comes to putting it all together, obviously it's a lot of uncertainty out there still because you're relying upon demand and supply considerations that there's no real one way or another that we know what the answer is going to be at this stage. What's the direction of prices likely to be from here, though, when it comes to, say, Brent in the next 6 months or so?
I think so. For the very short term, we shouldn't expect bearishness to take over the market. So I would expect prices to go higher towards the next technical levels. I think the key signs to watch right now are the levels of inventories and basically how much more demand do we have compared to supply. So we still see at Kpler, we still see the level of inventories fall. even though the pace of that draw basically is much slower than it was compared to the end of 2020. So just to give you a few numbers, between the beginning of the year and right now, we just lost about 15 million barrels as a whole in global onshore oil inventories. So right now we're sitting at around 3 billion and 625 million barrels of oil stored onshore. And so between the 1st of January and now, it was just a draw of about 250,000 barrels per day between, again, the beginning of the year and now. So it wasn't actually that much. So I think on fundamentals, OPEC Plus did this to support, again, prices right now. So in the short term, depending on how much, the vaccine rollouts continue in global economies, we should expect demand to prop higher and inventories to go lower. But the first sign to look at whether to check the next direction for prices will be global oil demand, global oil inventories. Apologies.
Always good idea to go and keep an eye on those inventory levels. Homayoun, just to go and finish off, of course, last week everyone was talking about the deep freeze in the United States, Texas, particularly literally frozen out. Those disruptions that were caused from that weather event, have they started to go and dissipate now?
Yeah, so we've actually seen production come back quite strongly, about 300,000 barrels per day just over the last week. It's true that in February we have seen exports much lower from the US, so crude exports down about 1 million barrels per day, down from 3 million barrels per day to 2 million barrels per day. So that's on the very low side coming out from the US. I think the main uncertainty in regards to the US is the state of refineries. So as far as we know, only about 57-60% of refining capacity in the US Gulf Coast has come back online. So there are a few questions about, how big the deep freeze has actually hit the infrastructure there, especially in Texas, which is, a region that is not used to have such low temperatures. So, but I think as soon as we have the refinery starting, coming back online and refinery runs running much higher, we should actually see production reach back previous levels as well. So just a matter of a few weeks, I think. Mm-hmm.
Homayoun Falakshahi, thank you for joining us on the program today, and enjoy the rest of your evening.
You're welcome. Thank you.